Good evening, everybody. Good evening. 957 companies on AIM, 81 of those in oil and gas, and tonight we're going to focus in on just 3 of those 81. A family of gas exploration companies, if you will, and like all good families, each individual member is different, autonomous, and yet they're connected by a shared common genetics. 3 different geographies, 3 different stages of maturity, and 3 very different balances of risk and reward. And we'd like to take you through that a little bit this evening. But critically, this shared DNA, this common platform or patented recipe, if you will. Now, many of you know me, but I have a few introductions I want to do here. And first up is the gentleman who thought it was a fancy dress outfit and couldn't quite find his Santa outfit, Brian Midginger. Brian is our exploration director in Sound and is actually heading off to another event after this, hence the inappropriate clothing, Brian, which we had huge jokes about beforehand. JJ Traynor, who is our CFO at the back, will also talk to us from Sound. We will then, Fiona Macaulay, Fiona's at the back there, will talk to us as CEO of Echo, and then Sarah Edmondson, who's at the front here with me, will talk to us as CEO of Saffron and CEO-elect of Coro Energy. With the whole name change thing, it all becomes a little complicated. So that was really by way of introduction. Now, gas exploration with a twist, and I think I might be in charge of the graphics here. Why the twist? Well, you can figure that out for yourselves. Either it's because we like to do things a little bit differently, strategic partnerships to fund the business, etc., or maybe it's the double helix of the DNA which runs through them. You can decide that yourself. But what we've tried to do here is put a bit of thought into what does this common platform look like? What does this common DNA that all these companies shared look like? And we've tried to distill it down, really, to 4 key elements. And the first you're going to be very familiar with because we talk about it a lot. It's around gas. That is our strategy. That is where we believe the sector is going over the next 5 to 7 years. It's a bridge fuel from where we are today, which is still industrially, if you look globally, coal and oil focused. And we think that's moving, and we're hoping that's moving to a non-fossil fuel future. And we see gas very much as that bridge fuel between those 2 worlds. So that's where we see the money is being poured into our sector at the moment. And we also, and it's important to say, see gas as a large part of the monetization strategy, the exit, if you will, of this strategy. So as we talk about the life cycle and how these companies transition through the escalator, when they come out the end, we see a strong part of the pricing that we get as being linked to the gas strategies that the super majors and others have at the moment. The second thing I want to say is each of these companies is focused on a very specific geography, which is a specific bet on gas pricing. And there are different reasons in terms of the demand-supply balance as to why each of those geographies work, and each of the CEOs will talk you through that. But that is the bet here, a local arbitraged gas pricing market, okay? That's the focus. And it's important that that's an industrial logic. It's not window dressing. It's kind of the core of what we do. The second is that we're choosing to be, and it's a choice, quite bold and adventurous in everything we do. We are seeking out and taking exploration risk in a sector where no one else is. Everyone else is heading for production, they're heading for development, they're de-risking, and they're getting, consequently less and less interesting in terms of return and risk. And what we're doing is choosing a different path. And we're only able to do that because of our expert technical team, because of our cornerstone investor support, which means we can fund it where others perhaps can't. There aren't many institutions at the moment chasing that exploration risk, but the oil price is changing. Watch this space. 2018 should be an interesting year from that side. And the other thing we're doing at this specific point in the cycle is buying assets which we think are very, very cheap. And you'll see when we come to talk about, Echo, who's picked up for, $2.2 a barrel equivalent, which is kind of the industry metric here, really world-beating metrics in terms of the price at which you can pick up assets. And that's part of the game here. That's part of the timing of this launch of multiple vehicles. The third thing is access to capital. We are extremely advantaged in having access to capital because these cornerstone investors that we bring in and the partners like Schlumberger we bring into our assets as strategic partners bring us that ability to fund this exploration portfolio. Now that is critical. Traditional theory says, you've heard me say it before, that retail, private investors and our sort of stocks don't combine. And the reason they don't combine is purely that retail doesn't have, in traditional theory, deep enough pockets to take those bets. Well, we've been able to navigate that and combine these 2 things by bringing in strategic partners and cornerstone investors. And you will find over time the cornerstone investors come in across the multiple vehicles. That's the plan here. Obviously, we have a lot of peers out there. I mentioned at the beginning how many companies are out there, but they are all very cash constrained. At this specific point in the cycle, there is no one else who's able to pick up companies, assets, portfolios, take risk like we are. So it's quite a unique advantage and one we intend to keep focusing on while the cycle is at this point. And finally, and perhaps most importantly, is this private investor-centric approach. We actually come from a philosophical point that you own the business, that we are there to manage it on your behalf, and therefore we're happy to tell you warts and all what's going on. We're happy to show you what's going on. We're happy to take you out to site. That's part of our raison d'etre. It's part of that DNA, and it's an important piece that I think distinguishes us from others. Now, many others are trying to copy that, some with some success, and it's not unique. We're happy for the whole sector to go that route. It's fine, but at the moment, that's what you get if you buy one of our family stocks, so to speak. The last point on the slide is actually going to be quite important when we look at the next 12 months or so. Once we've made a discovery, a material discovery, once we've got success in terms of hydrocarbon discovery and monetization, we want to monetize the play. We want to get you out. We are not in the process here of building a business for building a business' sake. We're in the process of making you money, and for that to happen, there needs to be an exit, a monetization at the end of it. And you'll see with Sound, which is sort of the end game in terms of the life cycle, let's say, that's the plan. We've been quite public about that, and you'll see that play out as we move forward. So that's our attempt to describe, for the first time actually, what is this common DNA? How does it play across the different vehicles? When you look at what we're trying to do, in terms of describing by either activity, scale, or anything else, you get past the launch stage, you move into buying up assets, buying up portfolios, and partnering. That's the stage which Coro eventually will approach, which Echo is in at the moment, and which Sound has been in over the last couple of years. That's really important, and it's been done counter-cyclically. We then move into the phase of operations, drilling, seismic. That's something which we're underway, and we've done the drilling in Sound. We're doing now the seismic, and there'll be perhaps a few more drills to come. With Echo, that'll start pretty quickly. I think Q1 will be straight into some of those workovers and wells in this Argentinian portfolio. And for Coro, we have a bit more time to really pick up the right asset base first, but you'll see that play out. And then we're into having the discovery and monetizing. That's the process we want to take each of these companies through. We purposefully chose companies to start this off, like Independent Resources, which were very small, early stage. So it really was a launch. It was a fresh vehicle. And actually with Coro, when you hear a little bit more over the next month or so on our plans, you'll see that that's actually a very small starting point for something that we believe is going to be large. And if you look at each of these, so I don't know how many of you are sort of into baseball or your sports, but Coro, very much focused here on the warm-up. So you'll see the Coro team really in the warm-up phase. Echo you'll see at second base, and Sound approaching that sort of home run. That's positionally where they are. This is very much the launch. This is very much the asset acquisition, and this is very much the end game. So different phases, very much intentionally split. We don't want to have multiple vehicles at the same point in the cycle at any point in time. What's Coro doing? Well, you'll see it kick off. It's going to be pretty much a busy 6 months, maybe 4 months for Coro. The new board, new branding, cornerstone investors coming in. Yes, an initial Italian footprint and an important one with cash generation. But actually, really, that's the pure foundation for something quite large, which we think is very exciting, which we've stumbled across, which we'd like to take you through it when, we can't do that tonight. We have to let the announcements catch up. But we actually have a new vision for that business, which we think will excite you and certainly excites us. And this is multi-TCF, it's gas. It's in an arbitrage gas market, as we've said we would. And there'll be a strategy launch, which will really be giving it some momentum in January and beyond January. So Coro really at that launch stage, very much a micro cap. Echo, nowadays, I think we can fairly describe that as a small cap. There we've had the Bolivian entry. We've now got the new Argentinian acquisition coming through. And that's looking pretty exciting. And you'll see some numbers coming out shortly on that. We're not here to front run those announcements. But it's multi-TCF. It's got some production, which is important as well. And, the acquisition cost I mentioned earlier is pretty competitive. And finally, Sound with its 2 legs, both using the seismic to prove up the existing discovery, and then perhaps a little bit more drilling there to open up some more multi-TCF plays in the same license position, and at the same time moving towards final investment decision and development. Those coming together within that sort of year or so for an exit thereafter. So pretty much, a focused strategy with a sort of conveyor belt where the companies start on one side and move out to the other and then exit. That is our very clear plan. And if I can find where we turn this over. And each of these, we've mentioned the arbitraging the gas markets. That's very important. But before we talk about that, I'd like to show you on there the percentages that is private investor owned in each one. Echo, 68%, Sound, 55%, Coro, at the moment, 46%. So, very, very strong private investor ownership. We'd like to retain that. We don't want to see you diluted down beyond that. We think that is the healthy place to keep the interest, to keep the liquidity, and frankly, for you to make money. And what is the delta between the 100% and those points? It's those cornerstone investors that come in, which is important to help us together fund this business. So that's important. And then let's look at these different plays. Actually, the whole of South America coming out of recession. Bolivia, very much the supply hub there, feeding into Argentina and Brazil, the major sort of consumption countries. Argentina, huge pricing advantage. You're in that sort of 6 to 7, maybe north of $7 per scuff. You'll have heard us talk about those numbers before. And we're positioned both in Bolivia, the supply hub, but also down south in the Austral Basin, which is actually 25% of their production in the whole of Argentina. The right postcode, and a really exciting deal, which Fiona's going to talk to you in a little bit more detail. Sound with Morocco, many of you know this, it's the conventional Taghi and Paleozoic play, feeding into southern Europe gas markets. Fundamentally, Morocco imports 90% of its hydrocarbons, similar to Italy, therefore attracting a huge price premium. So again, you're in that sort of $7 to $9 per scuff, maybe more than that. So huge pricing advantage, even more attractive than South America, purely on a pricing perspective, low risk, growing economy, and tried and tested geology next door in Algeria. So really what's not to like about that, a second play. And Coro, which at the moment is purely Italy. Italy also has its own merits in terms of tax regime and gas pricing advantage, but actually we're going to take it to a new frontier, which we can't talk to you about today, but you'll be seeing pretty soon. So that actually is going to have a different, broader positioning on this map, and we're looking forward to revealing that to you soon in the context of a launch. And the next 6 months are actually a rather exciting 6 months for any one of these vehicles individually or for all of them. People always say to me, which vehicle would you invest in? And it's very difficult. It's like choosing between, your family members. You can't really. They're all, they have their unique angles. But if you look at this, what are we doing? Very quickly now in Morocco, so this is Sound Reserve certification. We've alluded to many times wanting to do more onshore consolidation in Morocco. That will come through shortly. We'll have signatures on various licenses, including Sidi Mokhtar, and then we're into some of the big moving parts of a large-scale development story. Final investment decision, the funding, which will be non-equity dilutive, we hope and expect, on the development capital. We've got the seismic coming through, which will be CPR'd as we go, building up that story to the 31 TCF. We've got 3 huge wells, which we're drilling next year, kicking off, early in the year. So a pretty exciting time. Brian's going to take you through that. And then as we move towards the back end of the first half of the year, you've got more of those CPRs coming through, and also the concession process itself. So, a hugely de-risking towards that end game over the course of 2008. As you move forward in Echo, you'll see that we've been suspended for quite some time now. We'll be coming back to market shortly. With that comes the prospectus, the readmission documentation, a shareholder vote, which we'd encourage you to vote for this transaction, which we've spent so long on and are really excited about. And then you'll see actually next year a new website. You'll see the readmission post-RTO, the reverse takeover. We're doing a site visit, as many of you may know, down to the south of Argentina, which is a pretty exciting visit and an exciting part of the world. The acquisition will complete, and then we'll be off with the operations. And it's a beautiful portfolio because it's got production, it's got appraisal, and it's got exploration. And the CPRs, which are coming along soon, will talk to you about quite how large that exploration potential is, which we can't talk to you about tonight, but you'll see shortly, and suffice to say, we're quite excited about it. And then finally, last but by no means least, you have Coro, again, a different scale at this point, but we're looking for those binding agreements with Sound and what's currently called Saffron. We're then looking for the board appointments and the trading coming back, which will all happen reasonably quickly. And then, after that, we're into this strategy announcement. That will trigger a launch event, and it'll really feel like, hopefully, Sound 4 years ago when we started this journey, and perhaps Echo back in February, March this year. That's the focus, is to have a proper launch early next year. We've got some permitting news coming through hopefully soon, and some first gas in Italy, and then we're into the first of those acquisitions following the strategy. So these are deals which we've earmarked for some time. We've come across them, if you like, in an advantaged market, and are setting Coro up to go and make the most of those. So that's kind of the intent. That's what's coming at you in the next 6 months. We think it's going to be exciting. We think it's going to be appealing to you. Each one of them is a slightly different risk-reward balance. And I wanted to take a bit of time out before you hear the presentations to talk about that common DNA. So the format we have tonight, and we have a slide here somewhere which might be just here, is to start with sound. To ask Brian to start, and then JJ, hear a little bit of an operational update on how's the seismic going, what's happening with this aerial gradiometry, what actually is that, how does that fit together with the storyline, and the news flow that's coming at you. So we'll start with that. We'll then move through and let Fiona talk us really very focused now on the deal we completed. So what is the assets we picked up? Why did we do that? What's our thinking? Fiona will spend some time on that. And finally, Sarah's going to stand up and tell us about transaction logic. Why did we do this deal? What are we trying to create here? And what is the news flow and the activities that's coming through the journey ahead? What does that look like? So you'll hear from each of us. It's intended to be about 10 minutes each. We will take questions for sound after the sound event, because Brian, in his beautiful attire, needs to shoot off. I'll keep mentioning that if I may. And then we'll let the other two run, and at the end we can have a few questions. And obviously we're going to, for those companies that are suspended, we actually just regulatory-wise have to keep the questions quite narrow at this point, because we've got a lot of documentations coming up for you soon, prospectus, etc., which you'll have to vote on as shareholders, and we're not able to obviously front-run that. So just to be transparent, we'll be keeping, for the suspended companies, things very narrow. But the good news is, for sound, Brian and JJ, you can throw in any question at them, no problem at all.
What I thought I'd do was actually to build on where we left off on the boat. And so if you remember, we talked about the potential in the basin. So we talked about 17 to 31 TCF. And it was then a case of, what is the forward program that we've actually got to unlock that program? And we were just inferring it last time. Now we can actually show you some of the data, and it's really quite exciting. This is brilliant to see. Now, so what we're going to look at is the gradiometry. We're going to look at the early acquisition of the 2D seismic and the implications that has for the 3-well back-to-back program. Now, if you remember, those wells are aimed at the... Be helpful to show you this. Remember, these wells aimed at the 3 play types. So in green, the A structure, so a typical structural play, and we'll see an example of that later. The Northeast Lackbear stratigraphic play in yellow, and then sitting right underneath the T5 where the red is a Paleozoic target. So I actually want to look at those, and I really want to explain to you how the data that we've actually acquired is actually setting off the risks that we see, which actually are quite large, both the trap, the reservoir, and the charge. So let's have a look at the gradiometry. So the gradiometry data was acquired by middle of November. What we're going through right now is the analysis of that data, and that is going to take us till about middle of December. So there's about 28,000 line kilometres of gradiometry flown over this area. So that will take us, John told me this will take us from London to Sydney and back again. And the data is acquired in this twin prop aircraft, and it flies about 120 metres above the ground surface. And we acquire gravity fluctuations, so fluctuations in the gravity field across the area. And that is measured in these accelerometers, which are mounted within this this thing. Yes, that's right. This metal case. Because I know all about this. James knows I'm an absolute expert. So now what we're actually looking at with the fluctuations of gravity, we're looking at fluctuations with the density of the subsurface, so the density of the rocks, so the low density like sediments or granite versus the higher density basement or igneous rocks that are coming close to the surface. So that's what we're actually looking at. And what we are also able to do is actually through this lower density interval, we can actually sort of calculate the depth to basement, and I'll explain why that's important. Now this is like a before and after. On the left-hand side, we've got the original land gravity data set that was acquired in about 1962. And you see that it's a lower resolution, far more fuzzy, but you can still see the main elements of the area. You see this big blue area coming out through here. But look at the level of detail you actually get with the gradiometry. And it's just like going from 2D to 3D. It's really quite dramatic what you can see. We can talk about what we can see in a minute. So that picture on the right, shown here, and the outlines on this gradiometry map is where the leads are that we actually are looking to drill in the future. So I want to bring your attention to some of the things you can really see on here. So over Tendrara, this area through here, this is where you've actually got a low density sediment package filling in a big hole. So really what we have here is the Paleozoic source rock section over which there is salt and sediment. And this is our main source kitchen, so we're actually delineating very clearly the extent of our main gas source kitchen over the area. And you can imagine, if your targets are actually sitting over the top of your source kitchen, that's probably the best place you can be. So it's very straightforward to actually get the gas up into your main well areas. The other thing you can see on here is that if you go into Anwar, well, that looks a bit different, doesn't it? It looks a bit shallower. Now the thing is, we know from the wells and we know from seismic that the Paleozoic actually is present. And the interesting thing is that the Paleozoic would appear not to be as deep as it is here. So we're a gas window here. If it is present, as we think it could be, then it's going to be in the oil window. And coincidentally, we see along this line here, which is called the Metricool Ridge, there actually is a natural oil seep along that ridge. So you kind of think, oh, maybe there's an oil play that we actually haven't discussed, haven't talked about. But that makes it very interesting. The other thing that comes through very clearly is the fault trends within the basin. So you see this northeast-southwest trend, and that's parallel to our Tendrara trend. So it looks like a Triassic trend. And you can pick up this more east-west feature coming through here. What you're looking at actually is a pull-apart basin. Now within that pull-apart basin, you've actually got north-south features running through, coming up through here. So these are north, northeast, south, southwest. Now coincidentally, running under T5, now just here, pretty difficult for you to see at the back, but you've got the hint of that lineament which is lining up with the Paleozoic isocline or anticline, our target that we're seeing on seismic. I think the interesting thing here is, so can you actually predict away from this location to other similar north-south features in the basin? Are these the other Paleozoic targets? And this is really early days. This has just come off the plane. There's going to be an awful lot more analysis of the data. So what they will do is actually they'll backstrip the effects of the shallow surface geology. They'll take away the effects of all of the sediment above the Paleozoic. And so we actually should just be able to look at the structures and give you a much better feel for what the basin potential is over the area. I think if you want to see how this is actually being used, I think if you go onto the Bridgeport website, I think they have a case study for Cairn and for Tullow, and you'll see how this data is actually being used offshore and onshore in Uganda. It's really interesting. I think we're going to take this forward into the same fashion. So the combination of this with our 2D is very exciting. I think just one last thing to point out. these stratigraphic plates, we were trying to point to where the stratigraphic pinch out could be. And we've done it with the eye of faith, to be quite honest with you. But it does seem to line up very amazingly well with the lineaments which are coming through on the gradiometry data. So as you see the sand actually pinching out in that direction, it makes you feel very confident, thank you. The other thing you can see on these maps is that you've got the boundary to the south. This is a granite, and we always know this is well and seismic data. So granite here. Up here we've got volcanics, there's volcanics here. And interestingly, when you look at the core in T5, you're actually seeing big booklets of biotite mica. Now that doesn't travel very far at all, but it's not weathered. So that is the source of the clastics actually coming into the T5 Horst reservoir. So it's much more local. As you go in towards the northwest, over here, you're in a place where you're much more axial distribution of reservoirs. The entry point looks pretty obvious coming through here, winding up through the basin and out through to the north. So we're starting to get pick up a much better picture of the basin geology, prediction of where the reservoir is better, and prediction of where the potential structures are. Let's go on to the seismic. I should probably test you, Salim, on this because you've seen all these things now.
You assume too much.
So just as a reminder, so how we actually acquire this data, so we have 6 vibra-sized trucks in the desert. So these are vibra-sized trucks, and here are those 6 in the recording mode. So they're actually putting a pack down onto the desert. That is our source for the seismic waves that we're generating in the subsurface. The lines are actually set by guys walking with a GPS, so they're actually walking along the lines, setting the lines. The geophones are then laid along those lines, and we vibrate the surface, we set up a seismic wave that's reflected back up from changes in density in the subsurface and is recorded at the geophone and then transferred over to the recording truck. The recording truck actually looks at an early processed brute stack of that data and then sends that remotely by satellite to Milan, where WesternGeco actually process the data. We've acquired about 15% of our data, and it's been focused over the A structure area. So our first primary target that we actually wanted to drill. So that, as you know, that's what we were trying to do. And the data is amazingly good, actually. I want to show you a couple of lines just running through here across the A structure, just to give you a feel for how good this data is. Now, on the left-hand side is a line that was acquired in 1984, processed, then reprocessed in 2002, and it doesn't look that much better than the data we acquired a couple of weeks ago, which is unprocessed. Now what we're actually seeing on here, you can see the boundary fault to the A structure. This is the dip slope, this is your trap. Through here we're seeing the top of the salt. This is the basalt running through the middle of the salt. This is the base of the salt and the top of the reservoir. Now, the top of the reservoir is very unclear on this current data set. We were not absolutely sure that the reservoir is present, but I think we feel there's a lot of data coming through. What would be less convincing to you, but convincing to us, is that there's a lot of data also coming up through the Paleozoic. So we'll be able to do a lot of work in the deeper section. Now, the quality of this data is all down to Tim Marples and his team. He's done an absolutely super job. And, but it really, in the end, you know, we've got 2017 vibra-sized seismic compared with 1980s. The technology is far better, it's more modern. The closer shot spacing, so those trucks are moving in 12.5 meters versus 50 or 70 meters in the past. The fold of the data is 10 times what it was before, so you're recording 10 times the amount of information at the geophones, so 480 versus 48. And that allows you to remove a lot of the sort of background noise, which actually destroys a lot of the data, which you can see in here. And then there's a longer offset, so 6,000 meters of cable length versus 3,000 in the past. So you can actually see deeper down in an intersection, so we're actually looking at the Paleozoic. So I think what we're getting here is data that the 2D data combined with the gradiometry is allowing us to give a far better picture of the prospectivity, that basin potential. And it's going to allow us to actually move forwards to being able to drill these wells beginning in 2Q of next year. So I'll leave it there, and I'm sure you've probably got questions. And let JJ finish off.
Great, Brian. Thanks very much. And it's really good to be here this evening. Some familiar faces from the event that we had on the Thames recently, and some new friends to meet as well. Let me just remind you of the 2 license positions that your company has in Morocco. Over in the east, that's the Greater Tendrara area, so that's where we have the TE5 discovery and the seismic and graviometry that Brian was describing. And over in the west, that's Sidi Mokhtar, which is a slightly longer term bet for the company. Now look, we've been pretty busy in the background over the last couple of months, perhaps not the level of news flow that you've come to expect from us, but there's been a lot going on inside the company. And let me talk to you a little bit about that. Think about your Christmas goose floating across the waters of the Norfolk Broads majestically, with the feet paddling furiously underneath. So that's kind of us. And of course, that goose is trying to get to Scandinavia, get out of the country before Christmas comes, and it gets eaten. So this is just. So in terms of the news flow, let me just break this down into 3 broad themes. There's the exit from Italy, so sound leaving Italy, and obviously those assets going to Coro. There's a commercial solution for the TE5 gas over in Tendrara, and then there's exploration in Greater Tendrara, and then in the longer future, Sidi Mokhtar. So firstly on Italy, as you know, we announced an agreement with Safron back in October of 2017 to merge Sound's Italy businesses with Safron, which would then be relisted as a larger company on the AIM called Coro. And of course, Sarah is going to be the CEO of that one. Alongside that, Safron has an option to merge with Po Valley. The state of play is we expect the Sound Safron transaction to complete in early 2018. And before that, probably just after the new year, we'll be distributing a shareholder circular and asking our shareholders to vote in support of that deal. And I would expect a shareholder meeting somewhere in January. Safron, already Coro, will pay Sound in shares, so 186 million new shares to Sound for those Italy assets. And what that means is 1 new Coro share for every 5 Sound shares. And those shares are going to be distributed directly back to Sound's shareholder base. Essentially, we're dividending out that Italy position directly back to the shareholders. Once that transaction's done, Sound shareholders, that's you, will own between 1/3 and 1/2 of the new company Coro, and I'm sure you're going to enjoy all of the growth benefits that are going to come from that in the future. Sarah is going to talk about that. So Italy's the first chunk of news flow. The second one is in eastern Morocco, the Tendrara area, the commercialisation of the TE5 discovery. And we've been working very hard to monetize that on behalf of the shareholders. The next important milestone for TE5 is really the FID. That means final investment decision. And that's the point at which the board, on behalf of the shareholders, decides to formally launch the project. And of course, after the FID, the construction begins, pipelines and wells and processing facilities, with first gas expected around 2020. But before we get to that point, before we get to that FID, there are some important events coming up. And I think the one to really focus on next is the reserves audit. So if you remember, we estimate around half a TCF, just over half a TCF of gas in place in TE5, with upside closer to a TCF. What we've done is commissioned on your behalf a company called RPS. RPS will do an audit of those reserves and verify those numbers for you, and we expect to publish that in the next several weeks. Once we have that reserves audit in place, the other ingredients come quickly afterwards. The sales agreement for the gas, the contracts for the engineering and procurement and the construction of the development. So lots of things going on in the background, building up to that FID, final investment decision, in the middle of next year. So the first one was Italy, the second one was TE5 commercialisation, and then the third one is exploration. And Brian has given you an update on that. Seismic underway in Greater Tendrara, and we expect to begin a high-impact drilling programme in Tendrara in the second quarter of next year, potentially 3 wells back-to-back. Remember, in that acreage we have a base case gas resource, 17 TCF, and an upside of 31 TCF. So multi-TCF potential for your company. And just to help you to bring that to the share price, we calculate that 1 TCF of gas reserves for Sound is worth around £1.50 on the share price. So we're very geared to the upside with that exploration programme. Also in exploration, Sidi Mokhtar. This is the acreage that's over in the west of the country on the Atlantic coast. Again, a multi-TCF play. And you might have seen that we've published an independent assessment of the mapping in Sidi recently. Base case 9 TCF, upside 11 TCF. And the plan there is to start shooting new seismic to define prospects, new seismic in the second half of 2018 with drilling candidates potentially in 2019. Let me flag to you that alongside that exploration activity in Sidi Mokhtar, there are commercial opportunities around existing producing assets which are owned by the government, and we are working with them to see if there's a way that we can be involved in some of those projects too. So when you pull all that together, there's quite substantial activity coming up for your company over the next 6 to 12 months. Exit from Italy, commercialisation of TE5, and a new and very exciting exploration programme. All of us are very much looking forward to delivering that and then updating you on the results in the future. Let me close with this slide. Some of you may have met Kelly Sheets. Kelly is the operations manager for Sound over in Tendrara. And this is a picture of Kelly, which I took in September with his faithful dog Azaz. Azaz is Bedouin for guardian, so that's the dog. In the background, you can see a small but very important development for us in this area. Kelly and the team have been building a small accommodation and office facility for that license, where around 10 staff are going to live and work. And remember, it can be very cold over there, -15 in the winter, and you get snows, and in the summer as hot as 45 degrees. So this is a really important change and improvement in the working conditions in Tendrara, and of course it's part of a much broader strategy that we have to monetize in this area.
Good evening, ladies and gentlemen. Very nice to be here, and as JJ said, very nice to see so many familiar faces in the room. As James pointed out at the beginning of the presentations, we are currently suspended, so I am required just to read out one very formal statement, and then we can get on and get on with the job in hand, and that is that all the contents of the presentation that you will see tonight are fully in the public domain, and as per the disclaimer, nothing is an offer or solicitation. So without further ado, let us progress and talk about the exciting time we are in at the moment in ECHO. So we've published the RNS that details the outline of the transaction that we are in the process of completing in Argentina. And for us, this is a really, really exciting event. This will take ECHO Energy from first steps to being a full cycle company. And notwithstanding everything that's been discussed about being fully exploration focused, this is an important piece of the picture for us, and you'll see why. That current production within the portfolio actually enables us to really add value via the exploration that sits around it. So I'll come on to that in a moment. I've stood up before many of you a few times in the 5 months that I've been with Echo as CEO, and some of the things that we have promised you are that we will make exciting and bold acquisitions. And exciting and bold are two of those words really that run through the DNA of the three companies, as James has already referenced earlier. So those are two important words for us, and two important words that we like to live by. We promised you that there would be technically robust acquisitions, and we promised you that if we could, we would give you a full cycle portfolio and make ourselves a LATAM leader, building towards being a mid-cap LATAM player. And we really believe that we're now on the pathway to delivering on all of those. Over the next year, things that we will promise you is an active news flow. We'll promise you continued transparency so that you know absolutely what we're doing in terms of our operations across that platform. And we also promise you that we will be looking towards more growth within the region. This really is a unique entry point for investors as we move forward. We are suspended at the moment. I can't preempt any of the announcements that are going to be made, but there will be an admission document that will be circulated as soon as we're ready to do so. That will include a CPR that, as you know, is being prepared by one of the world leaders in competent persons reports, so Gaffney Klein. They're a hard taskmaster, and we hope that you will be pleased with those results, but I can't preempt that at the moment. So we are continuing to grow this LATAM portfolio. In the first wave of growth, we brought you assets or options on assets in Bolivia. Our growth within the region has very specific tick boxes for us. We need to know that we're looking at proven hydrocarbon systems. We want to look for strong pricing and demand. James referenced earlier that one of the keys for us in this gas business was that we were able to access these very strong pricing modules. We needed access to infrastructure, and that gives us many options when it comes to monetization. And when I delve into a bit more detail on the Argentinian portfolio, you'll see how important that is. In Bolivia, work is continuing. We're very happy. We'll come to a slide at the end of this presentation that shows you just a little bit of a taste of how the seismic reprocessing is continuing. And we continue to focus on that very prolific gas basin. So again, we have access currently to a number of opportunities in that area. But I'll give you an update on how the seismic reprocessing is going and where we're headed. And we hope that by bringing in this new company, we're actually giving you a real balance of risk, both country risk and portfolio risk. And I think that's very important for us as a company. So, Argentina. We did a lot of scoping, a lot of working across each of the countries, looking to what each country within that South and Central America region could offer us. And it's fair to say that for us, Argentina really gave us a primary geographical focus. And there's a number of reasons for that. We talk about supply and demand. Well, in Argentina, we have a real imbalance between supply and demand. Particularly during the winter months, Argentina is having to pay something like $12 to $14 per MMBTU to import LNG. They take something like 40% of the exports in this southern cone from the US and from Trinidad. So actually being able to develop on that and to come in and produce domestic gas is, as it was in Bolivia, it is one of the keys for the government here to increase that domestic supply. We've seen the government setting new prices for unconventional gas, and some of you may have read in the news over the last 4 weeks that those premium pricing that was set for the unconventional play in Vaca Muerta has actually now been extended down to the Santa Cruz province, the Austral Basin, which is where we're picking up these licenses. And that's really critical, because in the unconventional basin, you're having to drill horizontal wells, you might have to drill many more wells in order to produce a certain amount of gas, whereas in the Santa Cruz basin we may have tight sands, but actually we can still exploit those with cheaper conventional well stock. As you can see here on some of the graphs, it's trying to address countries where we do have this imbalance, where they're having to import gas in order to fulfil their demand. And there's a variety of pricing strategies across Argentina that allow us to sell into a multitude of different contractual arrangements. So, having decided that Argentina was sort of hot on our list of places that we would like to target, we spent a good deal of time actually scoping a number of opportunities that were in play. One of the things in Argentina is that it's been off the radar for a large extent. There are very few small cap E&Ps that are listed in the UK that have been able to access that market. We've seen about $9 billion of investment coming in from international oil companies over the last 3 years, and that to us provided a really self-stabilising situation. So we have the almost guardian angel, if you like, of the multinationals that have come in, but we really don't have very many small cap E&Ps that have been able to infiltrate and to get onto the ground and deliver a LATAM focused Argentinian business. So we were very fortunate to be able to access getting people on the ground to actually go and talk to people, to identify opportunities, and we are absolutely delighted with the relationships that we have made. We'll come on to talk about the partner that we have entered into this agreement with in a moment. But I just wanted to talk about what this portfolio brings as a whole. So this is a really compelling value-driven entry. For us, it's all about generating value. So we don't want to just get into an asset that we can't build that value, that we can't increase the share price, that we can't deliver value on. And this is a diverse portfolio. It is a full cycle portfolio, and that means it's got production, it's got already discovered resources, it's got prospective resources that are near field and able to be tagged on to the existing production at very, very low cost. And it has what we all want, that real upside potential, that multi-TCF excitement of exploration. And all of that is situated right next door to existing infrastructure. There are very few places that you can go in the world where you could have a multi-TCF prospect that's sitting within 10 kilometres of a main gas pipeline that's feeding up to one of the largest industrial and domestic users in the planet. So you know, we're within a very short distance of the main San Martin pipeline that goes straight to Buenos Aires. So actually having all of that scale, all of that potential, in an area where we have that infrastructure in place, it is going to help us really deliver value to you within the company. We have a great potential to significantly increase production in a near-term basis. So yes, production may not be intrinsic within the DNA of the company, but what is great here is that we have a limited amount of production. We're going to be acquiring something like 1,000 barrels of oil equivalent per day production, and that's split 1/3 between oil and 2/3 gas, but we can add on to that. So we've got exciting exploration projects that are literally within a couple of kilometres of existing production facilities. Those production facilities are sitting just at 10% utilisation, and that means every barrel that goes in has a really high value. We're already paying for the fixed OPEX, they're cash generative, so every new barrel goes in, or every new scuff of gas goes in, and that has a really high value associated with it, because we've already got that infrastructure in place. This is just to give you an overview of where the licences are that we're looking at, or that we've signed the heads of terms on, and we're down in the Austral Basin. The Austral Basin is in the southern part of Argentina. Hopefully very many of you in Q1 will be joining us on a site visit to the area, so that's going to be an exciting time for us to let you see what the terrain is like. And within that, we have an agreement to acquire 50% equity in a total of 4 licences. We actually subdivide those into two groups, CDL, and they're called CDL because we have Fraction D, Fraction C, and Laguna Los Capones. But in total, we like to group those together because they're very much the conventional oil and gas play. The geology is very similar throughout that. And then we have Tapiaiki, and this is our high-impact, frontier-scale exploration project that we believe is going to deliver significant value into the company. Just to give you a sense of scale, each of these blocks are about 5,200 square kilometres. So each of these are about the size of Trinidad. Together, they form about the same size as the state of Qatar. So this is a massive area that we're talking about. So you can imagine the potential that sits within that. And this basin as a whole supplies 22.5% of Argentina's gas. So this is very much an infrastructure heavy area that has a historic oil and gas production basin. There's been production here since the early 1900s, and that means that everything that we need to operate in that basin is there. We've got service companies in place, we have people who understand the industry. There's 300,000 people who live in the Austral Basin. Almost all of them live in Rio Gallegos, which is the service company town, or in a small town called El Calafate, which is where indeed the investor trip will be focused. That's more of a tourist destination. So we don't have a multitude of people around the area. We have an awful lot of sheep, we have an awful lot of llamas, but what we do have is some fantastic operating conditions. It's not often that you will find multi-TCF opportunities sitting in an area that has fully accessible hardtop roads. So we've got beautiful gravelled roads all the way through our acreage. We've got pipelines that run straight through the acreage. We've got beautiful gravel topography, which means that when we're doing civil works to drill wells, and this is a well that's located on Fraction C, there's really not a lot that has to happen in terms of ground clearance and preparing a site for drilling. And the population is limited, seriously, to sheep and llamas. So what is that going to look like for us in 2018 and 2019? I think if we, as we announced in the RNS when we talked about this, on Fraction C, D and L, we have an 18-month initial term, and that's going to be a really, really busy time for us. Right at the beginning of Q1, we're going to be kicking off with a series of 3 workovers. They're going to be into wells that already have proven gas, and the objective of that is to determine that we have the threshold that we require to put in a small diameter pipeline through to the main gas pipeline that feeds into Buenos Aires. So that's an important time. That's going to take us the first half of 2018 for that particular part of the licence. On fraction C, we'll be doing a little bit of seismic reprocessing first. I think Brian mentioned AVO work and how that can really de-risk your prospectivity. That's something that we'd like to do before we actually kick off the drilling of 4 back-to-back wells. That's 4 exploration wells that we'll be drilling back-to-back. Those locations have already been determined, but we will do a little bit more work to make sure that we're absolutely happy with where those are located. And then we'll be going on to shoot more seismic. When we acquire these licenses, they actually come with a fair covering of 3D, legacy 3D, fair covering of legacy 2D, but actually we'll be able to extend that with new high quality data that will be acquired in a way that enables us to make sure that we get the most out of this, you know, so that we can actually image the reservoirs that we're looking for, so we can look at all those extra pieces of information that help us de-risk the prospects. So that's in CD and L, and in Tapiaiki, the exciting frontier play will be again doing some seismic reprocessing in the first instance, starting the acquisition of some new seismic, but the focus really is to push ahead there to drill a couple of exploration wells within the first 18 to 24 months. One of the things I didn't mention is that block has been de-risked. In that 3 wells are already existing on the block that prove that many of those pieces of a story that are so important in exploration terms are there. So we've got fantastic source potential, we've got already discovered hydrocarbons on block, we know that we've got reservoir, and we know that traps are working. So as I say, a very, very exciting time, multi-TCF potential, and de-risked quite considerably. So this is just a little snapshot of where we are in Bolivia that I promised you, an update on the Bolivian reprocessing. Julian is in the room, so if you've got any particular questions on this, I'm going to be pointing them in Julian's direction. But what's exciting is this is our fast-track cube, so this is the first phase of processing that we promised to be completed by the end of the year. In this environment, we're actually processing and interpreting as we move along. The orange is indicative of our estimation of the top of the reservoir as we see it at the moment. And as you'll see, that interpretation is giving us guidance into this fold and thrust belt. Here you'll see the fault that we're thrusting against, and well, we might have to do pin the tail on the location of the well in real time. Much the same way that we did at the investor event a couple of months ago. So things are progressing well here. We will get the final process cube in Q1, but we're working now with Pluspetrol, our strategic partner there, to forge ahead. One of the things I didn't mention, I did think I'd got a slide on our partner in Argentina, but we've always said that partnerships are key to us. Pluspetrol were a great partner for us to align ourselves with in Bolivia. CGC are one of those companies that are very big that you've never heard of. So, private company. They are the energy, or part of the energy division of a much larger company called Corporación América. It's a conglomerate. It's one of the largest conglomerates in Argentina. They have a turnover of something like $1.4 billion per year. They've got 12,500 staff. They're the 7th biggest airport operator in the world. And CGC is a small part of their energy division. The energy division taking up 22.5%, just about 22% of the company as a whole. So for us, having the strength of that local partner on the ground, who have fantastic stakeholder relationships, who have maintained a great relationship through changing governments in Argentina, who have good labour relationships in the basin, and who have excellent governmental relationships, is going to be key for us, you know, as we enter into a new country, actually having that partner alongside us to navigate that path in the first years of operating in Argentina is going to be key. So I hope I've given you a snapshot into what is a really exciting time for us today. I am happy to take a couple of questions, but they have to be at the end. Sorry, at the end, I'm happy to take a couple of questions. But they will, of course, have to be restricted to anything I can say. So thank you very much.
Thank you, obviously, to Ben and James for organizing this event. What an exciting opportunity. So very grateful for you to make that extra effort. Sarah Edmondson, so I'm Chief Executive of Saffron Energy and Chief Executive-elect of Coro Energy. As you might expect, I'm extremely excited to be here with you this evening. I am also very limited in what I can reveal, and I struggle with that, I can assure you. I would like to tell you a lot more, but what I'd like to do is, to the extent possible, give you a little bit of a color as to what Coro Energy will be. James has already foreshadowed that Coro Energy is going to share that same DNA that sound and echo have. And some of the key ingredients, as he obviously pointed out, were to that genetic coding will be obviously replicated within Coro. And some of those key ingredients are effectively the right people. So having, at both board and management level, having the right people and people that are effectively highly motivated to deliver results. A supportive cornerstone investor, well-funded from day one, and a readiness to transact. Now, whilst we share a common DNA, we are obviously each unique in our own way. So what I would like to try and share with you is what Coro Energy's story is going to be. Effectively, Coro Energy's birthplace, as JJ also had highlighted, is going to be the Italian peninsula. And it's the result of the pooling of assets of 3 companies. This gives you a very nice portfolio of, a very nice tight portfolio of producing gas fields, 5 in total, incremental production development opportunities on those producing gas fields, so for example, sidetracks or development wells, and a nice suite of exploration upside. That's always healthy to have in any portfolio. So from this pooling of assets, Saffron Energy is going to see an immediate increase in its existing production in the order of 30%. And when you consider the incremental production development opportunities, that combined production could ultimately double. And as many of you know, gas production in Italy is extremely profitable, so this is a good place to be producing gas. So in summary, the Italian portfolio, in fact, sorry, I need to move forward here on my first line. There we go. So from day one, Coro Energy will effectively be a full-cycle E&P company. Now moving on, this is a great place to be. This is a great place to start. But Italy, however, is just a springboard to something even more ambitious. The Coro Energy you will know in 12 months' time will have an international footprint. And as James mentioned earlier, that growth will be bold and adventurous and focused on multi-TCF gas plays. Now, the specifics on the strategy cannot be revealed this evening, alas. That they will be revealed shortly. But what I can tell you is that we intend to grow our portfolio in a purposeful and fast-paced manner. So I just move on. You see Beethoven here. There is a reason. We were thinking, as we were talking through purposeful and fast-paced, the first thing that came to mind was Beethoven's Ninth Symphony. So just to give you a little bit of a flavor as to what sort of pace we intend to take with Coro Energy. We are, however, whilst that growth is going to be fast-paced, it will be purposeful. And that's something that I just really want to reiterate. These are going to be smart, deliberate steps on transactions that we have already, that are already within the radar screen. We are looking for opportunities with very specific criteria. That's also something that you would have seen with Echo Energy. So we're looking for jurisdictions that are going to have strong and stable gas prices. We effectively want to be able to commercialize our gas very easily, and we also want growing demand. We want onshore reserves, access to close existing infrastructure, and importantly, supportive regulatory environments. We want to be doing business where the governments want oil and gas exploration production activity. So Coro Energy effectively is just right off the heels of Echo. and the principles which drove ECHO's founders to create this vehicle of ECHO Energy to capture the opportunities within our industry still hold true 12 months down the road. And the success of ECHO and Bose Sound, in my opinion, are testimony to the fact that it's the right time to be building a large-scale gas portfolio. If I can just put this in a very simple terms, the window of opportunity is open, and we intend to build a very bold and adventurous gas portfolio while it is. I can give you, again, some very limited exposure as to what the upcoming timeline is going to be. So our launch plan, just to give you a little bit of a taste of what you can expect over the next couple of weeks. In the first instance, there's going to be the new board appointments. So effectively, this is the transition from the existing Saffron Energy board to the new board, which will consist of myself, James Parsons, Fiona Macaulay, and Marco Fumagalli. The Italy transaction signature is effectively the binding agreements, where signature is imminent. The commercial terms have been agreed, and it is a question of a week or so before signing will occur. The new branding and name change, which effectively takes place at the Saffron Energy EGM, which will be in the new year. There will be a new CFO, and yes, we already do have a candidate. And then there's obviously the strategy announcement and the new acquisitions. So ultimately, what we're working towards is that over the course of the next few weeks, we're going to be able to reveal more information, get you just as excited as I am. You can see I'm a little nervous tonight, so bear with me. But we're getting Coro to be in a position to where the launch will happen, and then we can ultimately really begin our adventure together. So thank you again for the opportunity to meet you tonight. You're not so familiar to me, so I look forward to actually getting to know you better over the course of the next few weeks. Thank you.